Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief.
Good morning, everybody. Welcome to the morning brief. Today is Thursday, March 23rd. So we made it through the rate hike. The Federal Reserve raised rates by a quarter of a point. So now we don't have to worry about that anymore. We can move on. So we did have a 8:30 number, unemployment claims, which were slightly better than expected. This continues to be the bright spot within the economy. Very, very strong labor market. Which is good for the economy. And this is kind of anti-hard landing, but you believe that the high interest rates continue to put pressure on employment and on demand. We'll see how that works out. Current account was also at 8:30. This is a minor number. It was better than expected. That being said, moving on, new home sales at 10 a.m. That's a big deal. A big deal. The housing market actually creates a huge, not only local labor supply, materials, but it also does it on a national level, since most of the appliances that you buy for a new home are, national. It's one or two companies that are national. 10:30, we have natural gas storage, and then that's it. So after the crazy day yesterday, hopefully things will settle down substantially. The VIX is currently at about 21, which is really not that big of a deal, but we had a ton of volatility yesterday. We'll look at charts here in a second. Looking at charts, the daily, we had again a big expansion day. It's an engulfing bar, and we have a giant wick at the top. So, how do we interpret these giant wicks? I've said this before, but wicks across the bottom is bullish. Wicks across the top is bearish. Maybe it was just a one-off day. We'll continue the move up. We'll just have to wait and see. I think that the POC here of the big picture is probably the top side, which is 40.24. And the bottom side is probably that low right there, 39.33. It's probably, I honestly think we're going to have a smaller day today. I don't know that we'll go up that much or down that much. I think it's just sort of a relief, do nothing kind of sideways day. We'll have to wait and see. Taking a look at the inventory. What does it tell us? Well, obviously, we had a lot of people exiting their position going into the Fed. We talked about that. Fed came out. There's that big giant spike to the upside and then to the downside, closing on the lows. Really, really ugly. But we are bouncing back. This is maybe some severely oversold, coming back a little bit today. We'll see. And the inventory was kind of ugly too, minus 19,000. So some of the weak hands, maybe that had been in from way back, are exiting, maybe exited just because of the uncertainty. Hard to say. When I have a big sell-off, usually you have a big sell-off in inventory, and that's correlated. So that's how the market is supposed to function. Taking a look at the intraday, what do we have intraday from levels? We have a pretty narrow range overnight. Its high is 4,001, and the low is 3970, basically. That's 30 points. That's a relatively small range from what we have been used to. So it's certainly setting itself up. There's definitely some resistance you can see up here. A little band around 40.37 to 41, like a zone. And you get up into the 70s there at 40.70, there's a good bit, and 40.90, there's a good bit. On the downside, where do we have support? We have support here around 39.66. Some good support around 39.38. And that's really 38 or 39.39. It's pretty easy to remember that one. And a little bit around 39.25. Those are the intraday numbers I would be watching. The Stock Traders Almanac is 33.3. So we have a decidedly negative day historically. 33.3% chance the market will be up, which means that there's a 67% chance that the market will be down. So a little bit of negativity from the historical side. We'll have to see how that works out. Hope you guys have a great day, and I'll see you tomorrow. Remember to subscribe and to make a comment, to like. Thank you very much. Have a great day.